All right, everybody. Stocks by the numbers. Welcome back. I just wanted to do a couple of quick earnings updates and just rehash a couple of the names that we looked at a while back, some recently, and of course, they're continuing to climb nicely and do very well. First, Pilgrim's Pride Corporation, symbol PPC here on the NASDAQ. Stock hit new 52-week highs today, $57.16. Originally brought to you on this channel early because this was one of the original stocks that I've always had on my watch list. So back in like 2022, near the beginning of the channel, this was one that I brought to everyone's attention, maybe like 24. We probably did updates, along the way here at 27, back down here at like 22. And I said I always liked it. Domestic company, chicken company. We know that people like chicken, demand is going to stay up. And it's funny because a lot of the times the revenue has actually been coming in light. Even as of last quarter here on Wednesday, you can see really nice EPS beat, $1.35, estimates $1.15, 17% beat. Revenue, $4.37 billion. Analysts expecting $4.68 billion, missing by over $300 million, roughly 6.5%. Stock has a slight dip, and now today pops up again to close over 3.5%, but runs up to 57 plus, hitting new 52-week highs, right? So this one, if you averaged in at around, the mid-lower 20s, if you were able to, obviously you're up over 100% on something like this, which is why I always say that there are multiple opportunities in the market and you need to kind of think outside the box, broaden your horizons, and you can see the type of growth that you can have on a lot of stocks that are flying underneath the radar. And it's funny because even though demand is up, and I know a lot of their metrics are actually moving decently or at least holding steady quarter to quarter, you can see that even though we're missing, we're climbing. And this is why I was talking about the overall undervaluation of the business, right? This is a company that now on average is bringing in like 16, 18 billion dollars a year in revenue. Current market cap after this run up is sitting at below 13 billion. So this is why, again, you saw something similar with GT, which we'll get to in a second, but this is why something like PPC I always spoke highly about. Again, not going to go anywhere, probably. High demand, people love chicken, domestic. I also spoke recently in recent videos talking about domestic agriculture and domestic farming stocks. And we spoke about something like a Sprouts Farmers. And of course, coming back to something like a PPC, you can see why these names, in my opinion, are worth your time, energy, and attention. But really nice run up here for PPC. And unfortunately, I think there was only like one or two people who reached out to me personally and said, hey, listen, good call on PPC. I had some, I'm up huge, or I just sold some, I made a great profit. So again, I know that everything we speak about may not be your cup of tea, may not be down your alley, if you will. But as I always said, I will never just jump on and spam out videos. And every time I bring a stock to everyone's attention, in my opinion, it is worth your attention. And it is worth at least investigating if you don't invest into. And you're starting to see, again, as we said, 8 out of 10, 9 out of 10 of our calls end up coming to fruition. And these stocks that we look at, these specific companies, are the ones that are growing nicely and potentially even outperforming a lot of the other trending stocks as well. And again, I'm not bashing, like the ASTs of the world and whatnot, but just remember, you need all young people, all retail investors, all of social media to get it trending and consistently talk about it to pump up a stock like that. Meanwhile, again, something like PPC, a lot of people, guaranteed, a lot of these YouTube hobbyists out there that act like advisors, they probably don't even know a company like this trades. Again, we looked at companies like the CBOE, Chicago Board of Options Exchange, which has been holding steady. It's been a great winner. Again, these people probably don't even know that company trades public. Coca-Cola Consolidated, I'm going to get to in a second. COKE, the bottling facility for Coca-Cola. Yeah, they might know about Coca-Cola, but they don't know about the bottling facility, which is technically outperforming Coca-Cola stock, and they just did a massive repurchase program, right? So this is what I mean. This is why, in my opinion, I am much more valuable than the people to my left and to my right. But PPC will look quickly. We can see the RSI up here at 69 1/3. We had the drop down, retest the 50-day, boom. Now we pop back up. So we might kind of calm down and flatten out into kind of like a downward parallel little consolidated channel and then potentially pop up even higher. Because again, you can see the stock was in just this sideways consolidated zone for all of these years, right? And this is what I mean. People will get impatient, they'll get fed up, and then probably here or here, when a lot of long-term investors cut their position, kaboom, this is what happens now. when everyone lose focus, when they take it when they take the spotlight off of it, right? I speak about this time and time again. But in my opinion, PPC will more than likely continue to grow, just in general undervaluedness, if you will. And, it might not immediately be line up to 60, 65, but again, even if we get in line with revenue, we're talking 17, 18 billion. So that's why, to chunk it up even more, if people tell me, oh, I see it getting to 70, 78, 82, believe it or not, in my opinion, I might actually agree with that analysis. I mean, again, we liked it all the way back in the 20s. Now we're up here hitting the high 50s, almost 60, just phenomenal growth. And again, chicken. People love chicken. Switching over to the weekly, you can see RSI about 67 and a quarter on the close, pulled it back and dropped it right below the top of the weekly Bollinger Band at 54.52. Stock closed 53.88. So that's why you might even slowly climb up maybe a couple of points, but then probably going to see a nice pullback to maybe that mid-Bollinger Band as well. Back there potentially, back to around 48.40. Obviously, if it pulls back to the low 40s here, the 50-day moving average, 42.51, bottom Bollinger Band, 42.28, in my opinion, that would be awesome. But, yeah, I don't know. Again, demand is up. I just think the company in general is undervalued, and that's why you're seeing these pumps, even with some rough earnings reports. And shout out to everyone who recently saw my Goodyear Tire video and said, you know what, this guy's making a lot of sense. I'm going to step in. I'm going to buy this brand name undervalued stock that was trading at a discount, right? We essentially evaluated the situation together. We utilized the Buffett method. I mean, the guy's the most successful investor in American history. So to not follow the way he laid out how to really do this, again, would be foolish in my opinion. Something like GT popped up on my radar. We spoke about the stock in the low 8s. I said, honestly, conservatively, even getting back to 10 really shouldn't be an issue. You can see earnings come out. Stock hits 10.02 today. Closes 9.58, up $1.41, 17.25% on the day. EPS comes out with a nice beat. We were speaking about them cutting some jobs, and I know they recently sold off some divisions, which people raised questions about. And again, I said, in my opinion, there's a reason why these companies do this. They probably see that it takes too much energy. The overhead is too expensive. It's just not worth it in the long run. So they sold off a couple of divisions. They cut, I think it was like 800 jobs or something like that. And we're trying to increase the efficiency and the EPS. And of course, as long as the revenue holds steady, in my opinion, the stock is still tremendously undervalued. Again, $4.95 billion in revenue for this last quarter. Analysts expecting $4.86 billion. They beat by roughly $91.25 million, or about 1.9%. EPS comes in at 39 cents a share. Analysts expecting about 29.5 cents. So they beat by roughly 9.5 cents, or about 32% above that EPS estimate. Again, this company just brought in almost $5 billion for the quarter. And after this pop to 9.5 at the close, we have a market cap of $2.73 billion. So in my opinion, I think the overall company is tremendously valued. I've spoken about this one in the past, and I know I did videos back at like 9, 10 here, and I had some schmuck like over here comment like, oh, this one didn't work out too well. But again, let the traders talk all the smack that they want, because we've shown the proof in the pudding. We have the growth plays and the compounding appreciation plays that we've nailed on this channel. So let them talk smack about it this whole time. And in my opinion, you should view it as an opportunity to continue to accumulate shares and build a position. Now we're basically right at this trend line. Look where it closed, right there. So in my opinion, I think it wants to get back above it. And I think that, it might be a slow run until next earnings, but I think that we can eventually intersect with this long-term resistance level, as you see, going back to COVID highs back in November of 21. And I think we can run up to there. And that's why you might be able to see like 1140, 11.5, again, conservatively, in my opinion. If we shoot right up over the next couple of days, you can see about 1170 and change. And again, they might want to flash break it above, right? And bring it up to 12. So in my opinion, I actually still like it, even after this big run up today. But you can see, when the spotlight went on it again during the lockdowns, Stock came all the way down here. Look at this, $4. $4 early 2020. Then all you heard about was people buying cars. Everyone needed tires. Next thing you know, this stock's up to $24. Right? So this is what happens when no one's looking. And again, they made it seem like, oh, it's a rough company. They're dealing with, some crap. This isn't worth your time. And then boom, look at that spike and that rebound. And then everyone was talking about, oh, have you seen the car companies? Oh, have you seen Goodyear Tire has been raging? It's up, 400, 500% from lows. That's the way they do it. So that's why, in my opinion, the fact that no one's talking about it, even analysts maybe, will still remain bearish on it. That's beautiful, in my opinion. Let them look the other way, because again, $5 billion for the quarter, $2.7 billion market cap. We looked at the numbers last time, but I just wanted to showcase again the fact that it ran up and closed right at this support trend line. We were in this wedge, bang, now we pop up, and that's why I'm thinking even a retracement here, like back to this low before it really chunked down. Again, you're looking at like 1059, 1060. That's why I'm being conservative. 11, 11 and a half really shouldn't be an issue. And we've seen stocks like this, DraftKings, of course, as we just looked at, climbing up to multi-year resistance levels and then breaking up and out on some positive news. So again, as it climbs up and maybe gets trending into the 11s, a lot of people may look and see and say, wow, this stock was just 8. Now it's up here at 11 and a quarter. I'm going to jump in. That volume may help push it above resistance and then, of course, pop it up to the next break point. And something like this, you might turn around pretty soon, and you might be looking at like a $14 or a $16 stock. And that's why I mentioned it. But yeah, technically a nice beat, shocking earnings turnaround. That's what I mean. Everyone counts you out, then all of a sudden you do what you got to do behind the scenes, you right all the wrongs, boom, you come out with a nice EPS revenue beat, and then the stock jumps 17%. Nobody was paying attention. Everybody counted you out. Beautiful. Those are the best stories in my opinion. Strong Q4 results. Let's just look quickly. Yep. Among 10 analysts that cover GT, average rating is a hold. Medium price target is 10.10. Down from 12.20, which in my opinion, again, that's still conservative. But again, you can see average price target 10.10. Which again is why I was saying, looking at the numbers, looking at how they beat it up, I was saying getting back to double digits really shouldn't be an issue for this stock. And again, we technically hit it today. Was 5.1 down to 4.95. Not a bad report in my opinion. Full year net income 70 million. Fourth quarter net income 76. Expansion across all 3 business units. Goodyear Forward drives 2024 benefits of 480 million exceeding plan. Fourth quarter cash flows 1.3 billion. Reaffirms Goodyear Forward targets. Deleveraging expected in 2025. As I reflect on my first year at Goodyear, quote, I am pleased with the progress we have made. We exceeded our full year 24 Goodyear Forward expectations and raised our targets for 2025, grew earnings and segment operating margins across all business units, and successfully reached agreements to divest non-core assets as part of our comprehensive strategic review. Moving forward, we remain committed to achieving our expanded Goodyear Forward targets, including further margin expansion and meaningful debt reduction. Again, that was, in my opinion, one of the main reasons why I feel Wall Street's keeping this stock down was the fact that the debt just began to climb and may have kind of overwhelmed the business. And now, again, we're selling off a couple of divisions. We got some cash coming in. We're making the company just run a little bit more streamlined, a little bit more efficient, cutting a handful of jobs, but again, maintaining that footprint, that market share, that revenue consistency. And that's why, in my opinion, believe it or not, I still like it. And it could swing from quarter to quarter, up to 11, down to 8.5 again. Oh my, what's going on? But in my opinion, I think that the overall business is undervalued. And I will continue to speak about Goodyear Tire until I hear otherwise, right? Until I hear otherwise. We'll look at this quickly. Stock charts. Uh, we can see, yeah, technically didn't even get up to the 50-day or the top Bollinger Band, 1030, 1052. So in my opinion, that's probably where it's going to go. The MACD came down and touched and then bounced nicely, of course, today on that big jump. RSI, middle of the road still. This is the weekly at 51. So that's why, could it pull back to 950, 945 next week to start? Yeah, okay. But again, chances are it's probably going to run up here and meet up with these marks of about 10.5. Breaks up to that 200-day moving average. Leet, you're looking at 1337 on the 200-day on the weekly. But again, we have to get up above roughly 1170, that resistance level. Excuse me. You could also see on the daily 200-day 982, right? So we ran up straight above it and then slowly started to pull back and closed below it. But we did happen to get up and close above the 50-day moving average of 914. So that's why we can kind of maybe quiet down for a day or two, but then chances are it's going to pop back up, reclaim that moving average, 982, top Bollinger Band 977. In my opinion, only a matter of time. You can see the MACD looks like it crossed to the upside as well on the daily. That's why, even with the RSI here, 63 with the stock running, again, 17%. So that's why I think there's more to come, and I think it claws its way back up to that 11 level and potentially retest that resistance trend line. And I wanted to look at Coca-Cola Consolidated quickly just to talk about how awesome I am. Stock originally brought to you on this channel back in March of 2023 at $550 a share. The stock just the other day hit a new high of $1,460.92. So you are approaching roughly a 200% return with a company paying you dividends to own it. Again, this is the bottling facility of Coca-Cola. The last time we did the earnings update, we spoke about the company putting their money where their mouth is and doing a massive share repurchase program on the shares of COKE. And of course, you can see we had the dip, and then the stock just started to rocket up and consistently hit those new highs. So that's approaching almost $1,500 a share. And it looks like we have earnings coming out Thursday next week. So we'll keep an eye on this one. But again, this company's bringing in, I believe, about 1.7 or something. Hold on, let me look. We're looking. This isn't talking about it. Keeps quarterly dividend. Okay. We're reading. We got a new CFO. This guy's going to retire. Okay, I'm reading. Yep, go to the website. Might have to just keep going back. But here we go, 10Q. You can see, yeah, sales 1.7 billion roughly. 5.1 billion for the first 9 months. And you can see it's always basically consistently increasing, right? 2.6%. Sales up 3.1%. Gross profit almost 700 million. Increase of 36.5 million or 5.5%. Gross margin improving 90 basis points to 39.5%. This is what we were talking about. Just that consistent, slow and steady wins the race. Just slowly chugging along under the radar. No one even knows this company exists. And again, the next thing you know, you turn around, you buy a chunk, you put 6, maybe low 7 figures if you have it. Of course, God bless. Park it in a situation like this at 550. Now you turn around, you're approaching, 1550, and the stock is still on the up and up. It's truly incredible, in my opinion, when you work smarter, not harder. You can see net income per share. Look at this, 1320 was 982. Just phenomenal. Beverages saw a 5.8 increase in net sales. And again, this is the bottling facility. So once they bottle it, their job is done, and they get paid. Right? So this is why I said, again, this was a way to potentially get involved in kind of the popularity of the Coca-Cola brands without technically owning Coca-Cola directly and potentially being exposed to who knows anything, right? Some sort of new woke marketing program that could potentially receive backlash, right? That's what I mean. Something like that. Like you might see a 2-3% drop in KO stock, but COKE might not move. Because it doesn't matter. in my opinion anyway. That's the way I'm looking at it. But just consistently, slowly moving along, and it's beautiful. It really is beautiful to watch. And again, they pay you a dividend to own it. Yeah, this was the repurchase. Announced its intention to purchase up to $3.1 billion in value of its common stock. It's roughly like a quarter of the business, right? And that's what I mean. When this came out, that's why it was such a big piece of news, because the company, I think, had like a 10, maybe $11 billion market cap at the time, right? So they're randomly authorizing to buy back 30% of the freaking shares. That's why you're consistently seeing the climb in this stock. Initiative resulted in the purchase of over 14,000 shares, 925. We're almost up to 1,500. So obviously they made the right call. Debt management, issued $700 million, principal 29, senior bonds, $500 million. Yeah, they spoke about, the credit facility as well, restarted credit agreement providing 5-year unsecured revolving credit facility, maximum capacity borrowing amount of $500 million, maturing on June 2029, $574 million in its own shares, and paid cash dividends totaling $163.7 million. Additionally, the company announced a new share purchase program under which it's authorized to repurchase up to $1 billion of its common stock. I mean, it really is just beautiful to watch a well-oiled machine just slowly churn along. And again, this one's underneath the radar. I don't care what anyone says. Again, now it's near highs. If you ask someone else about it, like, oh, this guy mentioned COKE, do you know about it? They'll probably come back like, oh, yeah, I heard of it, I was watching it. Yeah, BS. Because if you knew about it, you would have owned it. That's it. That's what it comes down to. And again, I know this one's a little bit more expensive, but we have to think outside the box. That's what makes it beautiful. You could see potentially retest here, the mid-Bollinger Band, 1369 and change. RSI just topped out at 70, pulled back to slight sub 60. So we can potentially continue to slowly pull back to sub 1400 and change, and then probably have a bounce and come back up to the Bollinger Bands. You can see we trumpeted here on the bounce off of the 50-day. You can see the widening and trumpeting. And then as we slowly and steadily just keep chugging along and staying above that top half Bollinger Band, you can see how the bottom one starts to come up, and it's almost meeting up with the 50-day moving average as well, sitting at 1306.50, which in my opinion is probably, short-term downside, roughly 100 points. And, of course, the 200-day is steadily climbing up. Look at that. Early September, off the screen at 950. Fast forward to today, almost up to $1,200 a share. So that could potentially be your quote-unquote floor if the stock wants to tank and pull back. Maybe if the market's correct as well. So that's why a stock like this, the way it's been chugging along, the way it's been growing, the way it's been repurchasing shares, you will more than likely, in my opinion, be actually much safer in something like this than a lot of the other trending stocks that people are focusing on. But again, to each their own. Weekly RSI about 62. Looks like it wants to keep climbing. Of course, we could be potentially tightening in a wedge. However, at the same time, the stock can potentially kind of tighten and go sideways, which may indicate an ascending triangle, which we could potentially be getting ready to pop up and above. And again, based on the numbers I was looking at, in my opinion, I have to stay bullish on it. And it's not just because it's up, of course, since we looked at it back here, which makes me a genius. But in general, the repurchase, the growth, the business, the consistency, in my opinion, I think we can easily put probably $2,000 price target on this stock, bringing it up 50% in value. That would bring the market cap to $18 billion about, which is roughly what they're bringing in a year in revenue. No, wait. I'm getting confused. Yeah, no, I'm getting confused. But, you understand my point. In general, the stock's undervalued. Again, I'm not going to pick it apart. We spoke about it already. This was just a quick update. Pivot points real quick. And we can see next pivot point on the weekly up here at 1528.38. And then a potential break up to 1737.29. In my opinion, that will more than likely happen. Again, I believe earnings due out next week. Chances are, as long as the company doesn't say anything crazy and they keep saying, hey, listen, business is great, we're bottling up all these beverages, we're repurchasing stock, then chances are, even if it flattens out or drops initially after the earnings report, that's what it did last time. And of course, it's been on the up and up since then. So even if it drops, in my opinion, I personally wouldn't get too worried. But you could see a pullback maybe here, 1345.77. That's kind of what we were talking about, maybe kind of retesting that mid Bollinger Band level, maybe getting to the pivot point and then having a bounce. But you can see recently rejected off this pivot point here, but I think it gets up to, like 1550 and change. Gets to that next resistance level on the daily. And yeah, on the weekly 1700, again, willing, if they have another decent report, you can see instead of seeing this wedge, you can see this curl come up and pop up and drive the stock up to new highs. So in my opinion, I'd probably give it 1700, if not after earnings, probably within like the next week, as we saw again last quarter when we had the drop and then we had the pop. But this was one, again, slow and steady wins the race, under the radar. Not many people speak about it. And of course, that's why I like it. But I figured I'd just do a quick update on it as well, because we were talking about earnings, and this one's just been doing phenomenal. So that's pretty much it, though. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone made a couple of dollars. Thank you for your time. Have a great weekend.